Good morning, and thank you, ladies and gentlemen, for joining us today with our first live cast. We will be doing this event more often. It's going to be on a bi-monthly basis. We will be hosting different business partners, talking about real estate, talking about financials, talking about interior design, talking about different subjects that interest our business partners who are investing with Select Group in the UAE and abroad. And today, we're pleased to welcome our colleague from JLL, Taimur, who's going to take us through some future vision about understanding 2025 market and the impact of the global economy and what's happening around us on the real estate industry in the United Arab Emirates and in particular focusing on Dubai. And we will be talking a little bit about different market segments and different type of products produced in the markets, delivery times, and looking for the future for you and our investors to benefit from this information while looking into putting funds into the UAE. Taimur, thank you so much for joining us today.
Good morning, George. Good morning, everyone. Thank you for having me and look forward to the discussions.
So, can you give us a little bit of information about yourself? What do you do in the company and the reports that you always carry in your pocket?
So I'm the head of research for JLL across Middle East and Africa. I've been in the region for 7 years. We look at all segments of the market from the residential, hospitality, the commercial markets, and also specialist sectors as well across the region, but also with a view to what's happening globally, how global trends are impacting local markets, and how sort of the flow of investments will be tailored as a result of this as well. We have a pretty broad team, and we have been involved with some of the largest projects within the UAE and the broader region. So we get involved in the earlier stage at pre-concept to financial feasibilities to market strategies. So we would like to think that we have a very good idea of what the future holds, and hopefully we can give some insights into that.
Thank you. Um, let's get starting. There is a lot of our guests also. They are already logged in online and waiting. Like me, actually, I was really insisting on inviting Taimur because I want to know what's happening in 2025. So when we're meeting our business partners and trying to sell them our product, we will be able to share with them some insights and information that will support and evidence why to invest in the UAE and why in Dubai and why into particular products. But before we go there, I just wanted to ask a quick question. The data source that you use in your reporting, is it purely related to the registration field of Dubai land, or you use also external data sources that really allows you to have more insights and a better vision from different angles?
Yeah, look, the registration data from the DLD, and which has improved incredibly over the last couple of years, is a significant part of our data analysis. But it's not the only part. We have a lot of proprietary data that we use from our own interactions as well, understanding where new products are coming online to see where prices are moving there. We also don't only just look at the price perspectives as well. We're also a lot of the time looking at potential supply, where that supply is coming in. We look at development costs. So we have a lot of proprietary data that we use alongside the data that we get from Dubai Land Department. And we also have a dedicated residential valuations team as well. Naturally, there's always a bit of a lag between when a property is actually registered and then when the deal's done a couple of months before. So we normally have a really good idea. I mean, these guys do hundreds and hundreds of valuations every single week for financing. So in that, with regards to that, we have a pretty good idea a couple of months before where we think the market is heading, the direction of travel, and that's across the board from the top end of the market to middle to affordable.
When we are looking into specific places, I always insist on the fact investment should be in real estate. The first three major things that we need to look at first is the location, and then the location, and third the location. So when you're looking at your data spread and distribution, you also distribute the areas of Dubai into specific different categories, correct?
Yeah. So one of the things which I'm sure my clients are really, really tired of hearing me say is I often say that Dubai is cities within a city. It's very, very difficult, and oftentimes it makes very little sense to look at it as a citywide level to see where prices are heading. It's useful. We would like to see where transactions are going, where average price trends are going, but the likes of downtown compared to JLT, from Palm Jumeirah to JVC, these markets operate in very, very, they're very different environments from what's underpinning them, where the demand is coming from, the supply trends within there. So location, 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 really, as you said.
All right, thank you. We looked at several things happening in the past years, and especially for the people who lived in Dubai for some time, like myself, since 2005. And we saw the market shifting. And one year it was the Chinese market, one year it was the Russian market, one year it was the Indian market. And then for a great 4 or 5 years, it was the Saudi and the GCC market that inflated the market in the UAE for buying real estate and investing in the city. And then now, when we see that Saudi has growing on a different scale and moving towards its own openness, a lot of people were saying, "Oh, now the business will shift." But nevertheless, we saw something completely different happening, and then we saw a new influx. So demographically, things are changing in the UAE, and every year we see a new trend and new buyer scheme and a new type of individuals who are really willing to invest in UAE. In the past 2 years after COVID directly, Dubai recovered on the fastest scale compared to any other city in the world. We were after 3 months into the market selling, and this is due to the vision and the effort done by the UAE government and by Dubai in particular. But the question would be now, after the surge of the Russian war, and we saw a huge influx of Russians coming to Dubai, buying a lot. Today, we see that they're trying to resell, and we started seeing different parts of the world reinvesting again in the UAE. And there is a lot of talk about increase of taxation in Europe. This is why there is a lot of individuals moving, especially from the UK, with the new laws related to the buildings and the amounts of money that they have to pay. So they started shifting to Dubai because it's safe haven. Can you give us a little bit of information of what you have foreseen with the team for 2025? Where should be that surge coming from? Where are we expecting another influx of population to that they will be reinvesting in Dubai
Yeah.
for 2025?
Yeah. And just before I do that, I'm going to put some context into this. In 2019, Dubai did 33,000 transactions across the board for the full year. This year, we're going to probably do about 180,000 transactions. So that gives you an idea of how much demand has come in. Historically, there's always 190 odd nationalities which are investing in the market, a broad range from different parts of the world. And that's changed very rapidly. As George said, Dubai reopening during COVID, particularly sort of at that time where a lot of the world was shut. A lot of people came here, saw the benefits of living here, the lifestyle, the drive from the government to keep growing. And we had a lot of soft infrastructure changes, which really was the catalyst for quite a lot of investment coming in to date. And that increased prices from 2019. We've seen apartment prices go up by around 82%, villa prices by close to 100%. Now, that has also new supply coming in, but at the moment supply is coming in, but the absorption rates are incredibly strong. So what the fundamentals underpinning the market right now are very, very significant. And not only is that very wealthy people, and I think that's a thing that's very prevalent and we'd like to talk about quite a lot because it's a nice story. But frankly, if you look at the mid market as well, if you look at what employment trends are doing, we've gone to really developing quite a strong, uh, middle income group, and that's really sort of driving end user growth as well, which I think is very important for the long run stability of it. Now, those factors really mean that if you look into the future, where price growth and trajectory and demand trajectory as well, it remains fairly strong. We think that particularly sort of the mid to the high end of the market, there's pretty limited supply. You look at there's a lot of launches which have happened over the course of the last couple of years, but the absorption rates have been incredibly strong, 85% plus, and pretty much across the board. But we don't think actually the supply is there, particularly immediately available supply, for any sort of correction in pricing. We think there will be a slowdown in growth, how quickly prices are going up. But the reality is price growth will continue across the board across the market, and that's going to be driven by demand as well, particularly end user demand. And some of the recent statistics that we're seeing is, across a broad range of developers, there's new launches which have happened where 60% of sales have been to owner occupiers, or what will be owner occupiers, and I think that's unbelievably high compared to where we were previously.
Yeah, but when we look today, from an occupancy perspective on the units delivered in town, we see that there is a lot of stress on the rental because there is not enough supply in the market. And when you're saying now that people think that there will be 60% vacant units on handover, but people will own them. And looking at the population growth forecasted in the future, there was a deficit this year of 22,000 units in the market to be handed over. So this will shift for the coming year. This is why we see that the rental did not get depreciated. Actually, it grew more, and there is a higher demand, and there is a higher rate to be paid. So when we look at the future and we look at the amount of individuals expected to come and live in Dubai in particular, compared to the amount of units that are going to be delivered on yearly basis according to the forecasted time frame, we think we see that it is very relevant to say that this growth in supply and demand is coming very close to each other for it to be able to supply the number of people living in the city.
Certainly, I think at the moment the occupancy rate for Dubai is something like 89%. So I think particularly in core areas and in the mid-market areas, that number is actually a lot higher. It's about 95%. So there's certainly very little room for growth, and new supply is frankly welcome within these markets. And I don't think you're going to see too much of a. I don't think you're going to see a correction in rates there. I think how quickly they're going up needs to slow down because the increase in the cost of living and is really outpacing where the income growth is. So I think that we're already seeing this in certain parts of the market, but also because the way that the market's structured as well with rental contracts, it's not like you can increase rents on a weekly, daily, monthly basis, what have you. It's a term structure of contracts. That's how it's structured, and also there's a lot of consumer protections in place, and rightfully so. I think every market sort of does need that to a degree. I think as a result of this, we expect that actually the demand and supply ratio will remain fairly strong and pretty solidly within the healthy territory of the market as well. There, in 27, we might see a bit of a shift down, but once again, cities within a city. What will happen in downtown is not what's going to happen in the outskirts, where people are a bit more price sensitive, and people will move further out in the market. And I think one point, which I'm not going to make any friends with, is we had rental declines for 6 years. It
At all.
was, yeah, yeah. So we had a pretty good run, and I think we are seeing growth, and we've seen incredibly strong growth in a very short period of time, particularly in the villa segment on the market. And I don't think that's slowing down, but I think that will mean that new typologies are coming online. So we're moving away from pure villas to more townhouses, more affordable units, and actually apartment rental growth was slightly decreasing, but because of how quickly villa prices went up, we've seen people actually move back into at least larger apartment units because of the affordability nature of that market. So we'll continue to see these trends played out. And I think in 27, it's largely, once again, apartment buildings being delivered in sort of secondary and tertiary locations. They might operate on a different performance trajectory.
Yeah. What we were seeing in the past and what you were saying currently, it's about the mid-scale market. But what I've been looking at many reports provided by yourself and other companies. I was able to identify the fact that luxury branded buildings are less than expected in Dubai. And when we say branded, I don't mean branded by a watch or by a bag or by, I'm talking about real brands of hotel operators, five-star operators operating a residential. And when we look at companies like Bulgari, like Six Senses, Mandarin, they're really now taking into their portfolio branded residences without hotel components in order to elevate the brand value from a service perspective and to inject the DNA of the brand itself into the tower so people will live in hotel feel, yet there is no check-in, there is no check-out, and you know your neighbors, you have your private concierge, you have like the same thing that we did with Six Senses Residences Dubai Marina, the same thing we did with Jumeirah Living Marina Gate, Jumeirah Living Peninsula. The question would be here, when we are trying to sell a brand and the pricing from a Dubai perspective on the branded towers is still sitting, I think, around 18 or 19 on the square footage compared to the rest of the world's comparable cities where there is demand on that particular aspect. So where do you see luxury itself? If you look at the others, you might, because there is a huge supply in the market, while real luxury is a very limited supply in the market. So where do you think in 2025, 2026, 2027, when these buildings will be handed over, and thinking about only 67 real branded buildings are done in the city out of 142 that were supposed to be launched. So where do you think, from an appreciation perspective, would be possible in the coming times?
Yeah. So, first of all, looking at those luxury assets, if you compare them to other global cities, and Dubai definitely sits among those global cities now, and the individuals who purchase those, the value proposition is still incredible, frankly. And that means, in my opinion, that there's actually still a considerable room for growth within that segment of the market, but for the right product. So there is a requirement to have the right amenities, to have the right service offerings, and have the right quality of finishing, and these things. And I think international investors who either want to come invest here or live here as owner occupiers, they're willing to pay for that, and quite handsomely as well. If you look at where price points here are for comparable, even sort of branded, hotel branded assets for pretty much the same product in other parts of the world, where we're talking still a few $1,000s difference in a number of cases. And
Number of cases, because we have some of them which are selling the square foot at 13, 14,000. So at this stage, I don't, do you think there would be an uplift or a growth potential for these
I think there's
units?
definitely new product coming onto the market, which is going to extend that price point out probably, by 20%. And still, if you compare that to some of the best branded residential projects in the world, there's still quite a bit of a gap there in certain parts. So you're talking about 14, but some similar products in other part of the world are going for 25. So that's a big leap, and I think there's sort of differences in why people go into those markets. But I think as Dubai sort of establishes a track record in the long run, there's no reason that it can't get there. But it has to be the right product. It has to be the right unit configuration, and quantum in these segments of the market has to be fairly controlled as well, because these buyers, particularly sort of affluent buyers, um, they're paying for it, and they're paying for sort of that privacy, the
Yeah,
exclusiveness of it. So
uniqueness.
yeah, exactly. And so when you see these products being delivered in other parts of the world, we talk about 30, 40 units coming in. We don't talk hundreds, which was what happens occasionally. It works in certain cases, but I think quantum is something that is being looked at pretty regularly now as well.
So currently in Dubai, there is a good number of these developments happening. And do you think they should slow down a little bit on the amount of units that handed over in the market or available for sale from such luxury to keep it unique and different?
I think the launches have already slowed down to a degree. You've seen
Mm,
that
mm.
there's much more fragmented market happening now, where top end of the market, where there's really quality units, they are 30, 40% above in terms of price per square foot. There's some supply coming on. I think there's been a natural slowdown, frankly, because the other thing is we've sort of run out of some of those prime beachfront plots, for example. There's very limited. There's 2 or 3 projects coming out which are going to be very significant and going to really challenge where that top end of the market is and the sort of what they can achieve. But I think because of that sort of standard and the benchmark they will set, they'll create ceilings for other projects which might not be hitting those levels.
Okay. When we look at the AED in particular, I think it's a very strong currency compared to any other currency, but it's still pegged to the USD. And currently, the US dollars, after the election of Donald Trump, saw a huge shift in the market. There is an increase on 1.7%. Euro sank down, went to 3.89 pound, started to slow down a little bit compared. Definitely, it's not going back to 3.9, but it is at a good. It's going down compared to the US dollar. And what do you think? Uh, with the change today of cryptocurrency increase, pricing increase, inflation ratios, currency change, exchange increase on the US dollars because we are pegged to the dollar. So, do you see a new potential for people to reinvest in the real estate market with all these facilities coming on board, especially that everybody's making money today?
Mm. So I think one of the things that's often forgotten is how much of an impact currency has on property investment, and that a drive in currency up or down can easily, enhance your returns by 30-40% or take them down as much as well. Of course, with a lot of political changes, not even sort of what's happening with the US, new administration coming in, but what we've seen in the UK, new government, quite higher levels of spending, and so the reaction in the market there, we will expect a new government in Germany in early parts of next year. In France, a pretty fragile coalition as well. These are all driving and will drive where the dollar is going to be. In general, we think that the dollar is going to be a bit stronger, and there's some risk associated with it. It'll be largely driven by inflation, and which could be based on where policy is. So if we get quite significant trade tariffs, that will drive inflation, which could actually drive interest rates as well higher. And that usually means if the US interest rate goes higher, then we see a lot of hot money going into the US, drives the dollar up, and which obviously for a dollar denominated economy such as the UAE means that, well, okay, it could be more costly to invest into here. But if you have investments already here, and if you decide to sell or what have you, the returns could be amplified pretty significantly. But I think that stability is important as well because the trust in the dollar is pretty critical, and that'll, I think, overall will help drive current investment volumes.
Yeah, but what we saw in the past few weeks, more month actually, before even the election, we saw that there is some readjustment of the markets, and we saw that there is some UK market moving back to Dubai
Mhm.
better than the previous times, especially after summertime. And we started seeing more European interested to invest in Dubai. Maybe because the number of the Russian market started to shift down a little bit, the others rose back to what it used to be normally. In 2025 and quarter one and quarter two, let's not even move towards the summertime. Which markets do you think, from all the statistics that you have gathered and information, might really move back to the UAE on a stronger pace? Because before this, we had this small chat, and you were saying we strongly believe that in the coming year there will be a good demand. So expectations from which part of the world? Because honestly, all our business partners here who are interested and marketing for these markets would like to attract some of that type of clientele towards their network in order to invest in Dubai. That would be great if we get a little bit of knowledge around that.
So I personally think there's going to be a lot of European investment which continues to flow in from mainland Europe over the course of the next year. I think it's a variety of reasons. I think the economic drive is one, particularly as we sort of start to see higher, potentially higher tax rates come into play across a number of different European countries, and that'll be critical. But interestingly enough, and anecdotally, I mean, I think I'm personally speaking to two friends of friends who want to come here, and they want to, come here for economic reasons. But actually, the reality is that I've spoken to a number of people, and across sort of the scale, really, from the average person who's coming in, wants to do a job, might have a very young family. They want to come here for the safety. They want to come here for the lifestyle, and I've spoken to very high net worth individuals who have pretty much anything they want on, at a touch of a button. That's their main reason as well. Is they feel safe here, they feel productive, and they feel that they can live their life how they want to. And I think that's a significant underlying reason which cannot be discounted at this moment in time. And We continue to hear this. The economic reasons are evident, and there's ebbs and flows in this, which will naturally happen. And there will be sort of people who go back and forth, but actually that lifestyle and that safety element of it is pretty critical to what's driving demand to these markets. I think we'll continue to see in other parts of the market Asian investment come in here as well, and I think that return is still sort of trickling in at this moment in time. But those are the two key areas that I think will
Asia
be,
and
yeah,
Europe.
yeah.
From an elasticity perspective on the economy in the country, do you still feel that Dubai is non-elastic?
In terms of what
Because the
happens in the rest of
inflation,
the world.
yeah, and the inflation ratios that are happening, it's becoming like really a lot of the individuals living here, they will start thinking it's non-elastic, it's elastic market. We cannot survive here anymore due to the spend and the cost of living, and it's attracting a specific type of
Mm,
individuals. While for like a person like myself, I've been living here for over 20 years, and I think everybody can live here according to the level of life that they want to have. So you can choose where to live,
yeah.
but there is two major components that are the biggest expense, which is your housing, which is one of them, and then maybe schooling if you have a family. But looking at what's happening and forecasting it, the inflation is definitely across the world. What's happening is that there is an inflation happening everywhere, on currency, on product buying, on services. Everything is getting more and more expensive on a specific range. And today, looking at bonds, looking at equities, NFTs, things are changing, volatile. I strongly believe personally that real estate is still one of the best safe haven for you to hold an asset, make a good return on it, and maybe if you buy few units and you rent them, you can from that rent go live in a villa and pay the rent of the villa out of your one bedroom and studio that you have invested. Because living in downtown or living in Business Bay or living in Marina is still a very attractive area where there is a premium on the smaller units where you can make a really good income. So when you look at that perspective, how are you able to look at the return on investment ratios considering everything that's happening in the city
Mm.
from an investment perspective? So do you think that the main question would be on the ROI? What's going to happen? What is the percentages expected on rent or resale value, capital appreciation, total price appreciation if it's an off plan? What are the visions coming now, the demand, how it's going to really impact these?
Yeah. So a few points there. I think first of all, starting off, the composition of Dubai has changed incredibly, and you can normally tell how long someone's been in Dubai when you talk to them about rental levels. And if I say to you that people are renting one beds for 160, 180, if you've been here more than 5, 6 years, the shock and horror on their face is pretty evident. And going, who does this? This is ridiculous in downtown, in Palm Jumeirah, etc. But for people coming in from other global cities, it still represents pretty good value compared
Actually,
to
yeah.
what they're paying. And I think that that is something which will take time to feed through to the system. And I think that will also mean that there's a requirement for actually affordable mid-market housing, but it might not be in the same locations as previously where people were used to living, where previously, 5 years ago, you had a strip of Dubai, which was a city center, and now you've got the Al Hayl corridor and even sort of the 611 behind it as well. And I think that there'll be market adjustments, and there'll be people who have to move out further, and there'll be infrastructure which has to compensate for this to ensure that the quality of our daily lives is still uh, good and amenable to get around. Once again, we were very used to getting around anywhere in the city in 20 minutes, and now it takes longer. But once again, it's pretty normal. It's normal to it was
Yeah,
pretty
35 minutes in the car, 40 minutes is a
in
normal
your
trip.
own vehicle. Yeah, if you go anywhere else in the world, it probably takes longer. There's people who commute hour and a half each way in a number of sort of global locations, so that will take time to feed through. And I think that means that there's still different areas which have will continue to see appreciation in rentals and prices. Rents went up very, very quickly. We've pretty much seen 100% increase on average rents. It's about actually 90 to 100% on the apartment side of things. Prices went up by 60% over that same period for apartments. So the yield appreciation over that time was incredible. If you're an owner and you saw that after, once again, seven really bad years, frankly, that you saw that increase, that's very, very positive. And prices are still to play catch up, really. The reality is, if everyone could, and let's say, I'm not saying that this is the right policy move at all, but if down payments went down to 10%, a lot of the influx that we'd see into purchasing would be monumental. But that's why one of the reasons that we haven't seen it. We are slowly starting to see a lot more own occupiers come into play, and we think the home ownership rate is going to increase. But the reality is that I think there's still considerable rental appreciation available in the long term. But I think we're going to see at much lower levels in the next sort of year, compared to where we've seen sort of 19% growth for apartments this year, the year to October, and around 23% for villas. I think the villa side will be pretty sticky, around sort of 15 to 20%. There's such limited levels of stock in the market at the moment.
This is on capital appreciation, or you mean on total price appreciation? Because when we're selling off plan,
yeah,
there is a lot of resale happening in secondary market before handover. So our investors are looking at capital appreciation, which is the 40% in our case from a down payment perspective. And some of them they're putting down the 40%, and then they are still collecting in some of our products today. Uh, more than 40% and 50% depends on the area, on the capital that they have invested, not on the total
cash on
price.
cash. Yeah.
Yeah.
The cash on cash investments can be high. I mean, it's a very institutional type of investment where you're looking purely on cash, not on the cash on the capital, or the total amount that you may not pay down yet. We've seen a lot less of this happening. In 2014-15, we saw about 15% of the market being flipped, as we called it. In this particular couple of years, that number was down to about 4.5%. So once again, a lot more stability in the market there. But one of the reasons behind that is we're seeing a lot of developers telling us that people are doing it. People are buying for their own occupation, as opposed to a pure investment, flip. Which once again points to a very healthy market. We spent an extortionate amount of time, not because we're sadistic or anything like this, just to try and see where's the gap in the market. Is there anything that we're missing? Is there, a potential event that could happen where prices could go down? We're not really finding it at the moment. The demand side is pretty strong. The supply side, particularly with materialization, is relatively under control, and we're not seeing a lot of speculation within the market as well. So I think there is, that underpins capital appreciation in the long run as well. But like I said, it'll be different in different parts of the city. I don't think we can sort of say one average across the board.
What do you think a good ROI on rental income is considered really good currently, and anywhere in the world? When you say 7% is a good or great,
yeah,
compared to other markets.
Average yield here is about, depending once again location, 6 to 6.3, 6.4, and that used to be 7 previously. And a number of other really sort of global markets, that number is 3 and below in a number of cases. So
we should be happy with that number.
We should be probably, quite happy with it, because it is quite a significant premium for a quote unquote emerging market.
Because honestly speaking, in most of our conversation with our business partners, we're really pushing that factor that Dubai is still a huge, it's a great potential return on investment from a rental income, because there is no tax directly on individuals that are owning and renting their apartments. One, and two, the ratio is really considered very high compared to anywhere else in the world. And this is why you were saying there is a lot of people that buy and own, because it makes more sense for them from a cash flow perspective to keep the money in and keep the income coming happening. And we strongly believe as a company, we look at the occupancy ratio and all the buildings that we have sold, completed, and handed over. We have some of our business partners in who bought earlier in Studio One or in Marina Gate, 12%, 14%, 13% net income after deduction of service charge is still happening on long-term rent. We're not even talking on short-term, where it has a different uh, portfolio. It brings different type of individuals, but definitely the returns are higher. Uh, do you think we should really keep expecting that return with the change of pricing that's currently happening in the market today? When we buy an apartment, in the past we bought, let's say in Marina Gate, in Peninsula where we are today, Peninsula 5. That this is a project that we're handing over before time by 3 months, which is a phenomenon. But the fact is, people bought a one bedroom at 1.6, and it's in the center of Business Bay, in the heart of Dubai, 20 minutes away from anywhere else. Do you think in this particular space, what might be the potential return if you bought that apartment at 1.6 and you're talking about 14, 15 dirham a square foot on service charge, which is approximately you're going to be paying around 13,000, 14,000 a year. So
Yeah, I mean, rent. You've gone from buying at probably 70 dirhams on a rental basis to going to about 115 in Business
mm,
Bay, for
mm.
example. So that increase is,
That 35
yeah,
is
exactly, yeah.
directly to the
It's
pocket. Yeah.
and what obviously what they paid for it doesn't change. So that increase is very substantial. So in that case, yes, it's double digit returns, and great. But the reality is that even today, you'd probably get 6% on this, which is,
With the
if
new
you
pricing of
with
apartments,
new pricing,
not the
where
previous
no,
ones.
correct, yeah.
Okay.
Now if you look at where that is for real rates, that 6% minus a average inflation in Dubai historically has been about 1.8%, roughly 1.79 or something like this. You still get 4% return on a real level, and that's okay. We would discount service charges, so there's still quite a significant level compared to where we are
Mm.
globally.
Is there any specific metrics that you use in order to look at any potential risks or volatility of the market?
We do a lot of scenario analysis to say what happens if materialization increases or is very very strong. What happens if demand is higher or lower? So that scenario analysis when we're doing our work on new developments is quite critical because it shows in our sensitivity analysis where IRRs will deviate to 20% increase in prices, 20% decrease in demand, this kind of stuff. We do quite a significant amount of that for our development partners.
And anything related to Dubai in particular, do you foresee any change, any potential, any of that, God forbids, happening?
I think we don't. There's nothing which is critical on the horizon. We think anything which could drive the market would be exogenous in nature. I don't think it's necessarily originating out of here, where we're going to see any significant policy change that's going to drive that. We're thankfully in a very safe country, in a challenging neighborhood at times.
Mm.
But a lot of those times where there are challenges, Dubai tends to actually perform well as a result of it as well. There's a safe haven location.
I had a conversation with one of our business partners a few weeks ago, and he was telling me what will happen to Dubai if there is a crash. What will happen to Dubai? I said, listen, after living here for 20 years, I can tell you one thing. I can guarantee you the recovery ratio. I can tell you that Dubai recovered from anything that happened within a year, maximum a year and 2 months. The worst thing that ever happened here was in 2008. Mid end 2009, everything went back to normal. While the rest of the world took them 5 years, 7 years, 8 years, 10 years to recover from what happened in 2008. When COVID came here, it took us 3 months to go back on our feet, open back the country, and continue with it. While the rest of the world, like Australia or New Zealand, they stayed on a lockdown, or Canada, for over a year and a half, not allowing even people in or out. So the guarantee was always that Dubai will always have the solution. The government vision and drive will make sure that they will be delivering that security aspect that will put
Mhm.
people back on a good pace and believe and continue the journey in the city.
I think one thing is important to remember is it's always interesting comparing ourselves to others, but the fundamentals of Dubai today are very different to what they were in 2019. The people who live here, the industries that we have here. If you've seen the data from Ministry of Human Resources and Emiratization, um, the changes in employment levels across various different industries, particularly higher paying industries in the last 3 years, has been incredible. And I think that is the underpinning of the long term nature of it. So a lot of cases, we're not really, frankly, it wouldn't be an apples to apples comparison to where we were in 17, 18, 19, 20. We're looking at a completely different structure of economy here. So from financial business services sector to logistics to higher value markets as well. If you look at that's Dubai alone, right? But we've seen similar things in Abu Dhabi, and what we expect to see in Abu Dhabi as well in terms of particularly the higher value manufacturing sector, the growth that we expect to see there, and the investment which is going to be rolled out by the government will mean that it's a completely new environment. It's a completely new dawn there.
Just one last question before we wrap up and thank everybody. Quick question and only numbers. All right, pure numbers. If you can help us with the forecast increase in pricing on branded luxury residences and upscale residences and villas for 2025
I think we'll see double-digit growth
on the three together.
Yeah, I think between 10 to 15% growth within that segment of the market.
Year over year.
Year on
2025 will
If
be
we say
higher.
December this year to December that, yep.
Wow. Okay, fabulous. I have no more questions. Actually, it was a great conversation, and I think we touched points on a lot of great subjects. I want to thank you for being with us. I want to thank everybody. We will take Q&As after we just cut the live feed. And thank you so much. The information was amazing. And I think we're going to use it. I was so excited to meet you because I really wanted some intel to understand where do we want to market, which targets we want to achieve, and what we're looking at from a launch perspective for the coming year with a great potential of increase of pricing. Thank you, Taimur, so much.
Thank you for having me. Thanks, everyone.
Thank you, guys. Thank you. Yeah. So please, anyone who has any question,